Whether or not you know the functions of a credit or debit card, you've probably seen people use them at a mall, at a gas station, or at the ATM. In our society, the usage of cards has become so prevalent that almost all businesses offer payment options of credit and debit cards. These cards contain money that is either stored or loaned out from a bank. In order to own a debit card, one must first have a checkings or savings account in a bank. The money within the account is accessible to the individual through a debit card and is deducted every time the person makes a purchase with the card. Basically, a debit card is a plastic substitute for paper money. A credit card, on the other hand, does not require a link to any checking or savings account. Instead of deducting from one's own account, a bank allows an individual to loan out some money to make purchases. Each time an expense is paid with by a credit card, the bank loans out a sum of money and makes a record of the purchase. At the end of the month, the bank comes back to ask for the money that was loaned. If one fails to pay back the bank when the month is up, the bank charges a late fee or an added interest rate, which continues to accumulate the longer someone fails to meet the deadlines. Being able to pay back the bank on time with the full amount of money contributes greatly to one's credit score, which is extremely important as measurement of financial stability and credibility. A credit card comes with a credit line, which has a spending limit. Unlike debit cards, where one can only use the money within his or her account, credit card users can take advantage of the line of credit, albeit up to a certain extent. Credit card users do, however, have access to a large pool of money that can be loaned out. Having said that, all the available money often leads to troubles with budgeting, as people tend to spend lots of money purchasing goods they cannot afford. This leads to the main argument for debit cards, which is that since an individual only has access to the money within his or her own account, it is impossible to overspend, as the money within the account is finite. Most people believe that a debit card is easier to manage and keep track of. On the flip side, debit cards are known to be less safe and more prone to fraud. In addition, there are no royalties or rewards that come with debit cards. As for credit cards, the main argument is that they offer a variety of perks and rewards to its users, given that the user responsibly pays back the money on a monthly basis. In addition, using a line of credit also builds up a credit score, which is incredibly important for indicating one's financial stability. Of course, this also brings up the issue of human error, whether it be accidentally missing a payment or overspending on a purchase. The consequences of irresponsibility are drastic when using a credit card, as interest rates for late payments or overdrawn credit lines are extremely high. When considering whether to use a debit or credit card, the first thing to evaluate is your ability to manage your money. If you believe that tracking expenses and budgeting is your forte, then credit cards may be an option to consider. However, if you believe that forgetting to pay back loans or accidentally spending too much are probable situations, using a debit card would probably be a safer bet. Hope this video helped you understand the differences between credit and debit cards. If you learned something, please take a moment and browse through our other uploads. Thank you!